Hello, Tony. And I'm David from JPMorgan. Very welcome to join our JPMorgan CEO and the CFO conference call in 2025. And can you start to brief your business outlook and the business situation in the first quarter 2025 and the fourth quarter 2024?
Okay, thank you, David. This is Tony Zheng, the IR Director at Novatek. Let me actually first spend a couple minutes to summarize our key message from our analyst meeting last week. We actually just held our quarterly earnings call last Wednesday. First, in terms of the quarter four, our quarter four revenue of 25.2 billion exceeded our guidance of 24 to 25 billion, which was helped by some rush orders or subsidy programs, mainly in China for some mobile phones and the TVs, but still down around 10% quarter over quarter due to the low seasonality as well as some inventory control from the supply chains. In terms of gross margin, our gross margin of 39.5% and met our guidance of 37 to 40%, but slightly down 20 basis points from quarter three, mainly due to the product mix change, such as we had a low weighting on the high margin SoC business, as well as the higher material costs, such as from gold. Looking into the first quarter, our revenue guidance is at 26 to 27.2 billion, midpoint representing about midpoint quarter over quarter growth. In terms of the momentum from our three business lines, we expect all of three business lines to grow sequentially. But among three, the lifestyle driver will grow fast, mainly due to the benefit of the subsidy programs in China, particularly for TV on the large size. Then followed by the SoC business, which a big portion also is coming from the TV-related business, will also benefit. Small medium-sized drivers still grow quarter over quarter, but to a lesser degree, mainly due to the slowdown from automotive supply chain. Among small medium-sized drivers, we still expect the OLED driver for smartphones and the LCD TDDI for tablet to grow quarter over quarter in the first quarter. Let's move into the gross margin guidance. We expect our gross margin to be at the range of 37 to 40%, which is similar to what we provided for quarter four. But the midpoint is 38.5%, seems a little bit lower than what we just reported for quarter four. However, we feel comfortable to maintain our gross margin in first quarter as we see a relatively stable or better product mix moving to the first quarter, along with our some cost reduction effort in the supply chain. Despite we will still see some annual price negotiation, particularly at the driver space. So let me stop here and back to David.
Thanks, Jason. I have some follow-up questions. First of all, can you elaborate more about your OLED TDDI product pipeline and the competitive landscape and some potential customers that will sound for this product?
Okay, I think we highlighted a couple of features for OLED TDDI as for smartphones. One, everything is on schedule. I think we will start to ramp up gradually from late first quarter, and we expect the customer's model will be available in the market during the second quarter. Two, we will provide more update on our OLED TDDI as we might have a much better visibility in terms of the demand shipments as well as the opportunity from other customers. Two, in terms of impact, we do expect the OLED TDDI to generate higher ASP and margins due to the technology leadership as well as some cost saving for our customers. So we do actually expect to see some good momentum from our OLED TDDI. We do see we have some leadership versus our competitors at the OLED TDDI, as we are one of the very few company to have all the required technology on OLED, on the TDDI, on the touch side.
Got it. I think you have mentioned about your upside for first quarter 2025, maybe about the China subsidy and some momentum benefit from tariff and so on. Do you expect about some continued momentum from the tariff and the China subsidy going to 2022 second half 2025?
I think I know other names also mention about these factors. But if we take a deeper look, I think if look at one by one, mobile phones might benefit a little bit from subsidy program in China, but nothing to do with tariff. As a major exposure to Chinese customer focus on pretty much non-US business. I think we see maybe the TV sector might benefit a little bit more from this potential tariff, but nothing more than that. In terms of the second quarter, we didn't provide any preliminary view for second quarter or rest of this year, but we do also expect to see a lot of company-specific opportunity into second quarter, such as I just mentioned about the introduction of OLED TDDI, but we also see some new project wins or ramp up during the second quarter. So it's a little bit too early to provide a comment for second quarter, but I think for 2025, we remain cautious, optimistic, and expect to see some revenue growth in 2025 year-over-year.
Okay. Can you talk more about what is the most important growth driver for 2025 across those product mix?
I think overall speaking, given our leading position across driver, I think the number one still we need to have a healthy, a moderate growth from the industry across different application. Two, overall we still see rising adoption on OLED product across, say, OLED, but also into other segments such as IT. And three, we also see some recovery on the high end and partially maybe helped by the recent subsidy programs. I think across phone, TVs, and even maybe finally from the notebook PC from the corporate side. Then, of course, we also see some opportunities still share gain from some relative new business, particularly on the OLED driver side. And lastly, we also see some emerging opportunity at our SoC or some ASIC opportunities. So all put this all together, also a little bit lower base in 2024. So that's why we are a little bit cautious, optimistic for our growth outlook into the 2025.
Okay, got it. What is your view about the competition for OLED DDIC, maybe from China and other suppliers and competitors?
If you look at the industry data for the smartphone OLED driver, we rank about number 2 or 3 in terms of unit market share at about mid-teens. This the number 1 is Samsung LSI. We rank 2 or 3 along with another Korean suppliers. But I think 3, 4, 5 are all Taiwanese companies, such as Radiant, Novatek. So Chinese competitors still relatively small at this space. I think their combined market share is still at about mid to high single digits. So I think on the OLED driver, the competition from China is still at the early stage. Then shift the gear, say, comment on the competition from other Taiwanese company. I think they did have a good momentum from late 2023 and into 2024. But recently, we have gained some business opportunity back from our wider offerings and the release and even upcoming OLED TDDI. So that's why I think for the Android OLED driver and the smartphone, we do expect to have a solid growth year-over-year in 2025. Actually, if you look at the recent monthly revenue, I think our revenue in terms of sequential or year-over-year has been more resilient than most of our peers. It's different from what we saw a year ago.
Got it. I think that is the last question that I want to ask is about the geopolitical issue. As you know that the Trump presidency, and what is any geo impact from your customer, and how do you mitigate the geopolitical risks for Novatek?
This is an ongoing process. Even before his inauguration, I think we start to see a more discussion on this at the supply chain. So I think from our point of view, one, we want to continue to increase our business mix outside of China. So we have made some progress. As we highlighted, we got some new customer in Korea and to the States. I think that's a good progress. Also in the supply chain, we used to more concentrate in Taiwan, but we also gradually expand our supply list for the foundry and the packaging. We want to get a little bit more balance to face the potential hurdle or challenge for geopolitics. But now it's a little bit too early because still there are a lot of movement dynamic at the least tariff, such as there are some comments say they might put some tariff even on TSMC, but we are chip provider and we provide our chip to component suppliers such as panel or even to hardware companies. So we don't ship our product directly into the States. So how will the US government implement this tariff? Still kind of wait and see situation. We need to get more details from the next few months.
Okay, thank you, Tony. I think this is all the questions that I have. I think we can wrap up the call. Thanks, Tony, to join our call, and see you next time.
Thank you, David. Bye bye. Have a good day.